Hi everyone, welcome back to G2's weekly market update, where we break down the key developments shaping global markets. For the week ending 6 March, markets experienced heightened volatility as escalating conflict in the Middle East pushed energy prices higher and raised concerns about inflation and global growth. At the same time, investors digested mixed economic data across major economies while reassessing central bank policy expectations. Let us take a closer look at how markets performed across regions. United States. Major US stock indexes ended the volatile week lower as investors reacted to escalating conflict in the Middle East following US and Israel military strikes on Iran. Oil prices surged amid concerns about potential supply disruptions, increasing worries about energy-driven inflation. Among the major indices, the S&P Midcap 400 led declines, followed by the Russell 2000, Dow Jones Industrial Average, and S&P 500, while the Nasdaq Composite held up relatively better but still fell around 1.2%. Economic data showed continued expansion in some areas. The ISM manufacturing PMI remained in expansion territory at 52.4, while the services PMI rose to 56.1, its highest level since mid 2022. Labor market data was mixed. Private payrolls increased by 63,000 in February, and jobless claims remained stable, but sentiment weakened after non-farm payrolls unexpectedly declined by 92,000 and the unemployment rate rose to 4.4%. The report could complicate the Federal Reserve's policy outlook as it balances a cooling labor market against rising inflation risks. Europe. European equities declined sharply after several weeks of gains, with the Stocks Europe 600 falling more than 5.5% as rising energy prices and geopolitical tensions dampened investor sentiment. Major indices across the region also posted steep losses, including Germany's DAX, France's CAC 40, and Italy's FTSE MIB, while the UK's FTSE 100 dropped about 5.7%. Higher oil and gas prices raised concerns that prolonged geopolitical tensions could push inflation higher while slowing economic growth. Eurozone inflation had already risen to 1.9% in February, prompting markets to increase expectations for potential European Central Bank policy tightening. Despite these concerns, labor markets remained resilient, with the Eurozone unemployment rate falling to a record low of 6.1%. Japan. Japanese equities also declined during the week, with the Nikkei 225 falling about 5.5% and the topics dropping roughly 5.6% amid global market volatility. The Middle East conflict raised concerns about rising energy costs for Japan, while relies heavily on imported oil and gas. The Bank of Japan Governor Ueda noted that the conflict could impact the global and Japanese economies through higher energy prices, but reiterated that the central bank will continue raising interest rates if economic and inflation conditions evolve as expected. The yen weakened to around 157.6 per dollar, while the 10-year Japanese government bond yield rose slightly to 2.15%. Meanwhile, Japan's largest labor federation called for wage increases of nearly 6% in this year's negotiations, supporting expectations for continued wage growth. China. Chinese equities also moved lower as investors weighed geopolitical risks alongside new policy signals from Beijing. The CSI 300 declined about 1%, the Shanghai Composite slipped slightly, and Hong Kong's Hang Seng Index fell more than 3%. At the National People's Congress, China set a GDP growth target of 4.5% to 5% for 2026, the lowest range in decades. Policymakers emphasized boosting domestic demand while continuing to prioritize technology development and advanced manufacturing. Manufacturing data offered mixed signals. The official manufacturing PMI remained in contraction territory at 49.0, while a private sector survey showed stronger activity among export focused firms. G2 takeaway. This week highlighted how geopolitical developments can quickly reshape global market sentiment. Escalating tensions in the Middle East pushed energy prices higher and renewed concerns about inflation weighing on equity markets worldwide. As investors navigate these risks, the balance between geopolitical uncertainty, energy prices, and central bank policy will remain a key driver of global markets in the weeks ahead. That is it for your G2 weekly market update. Thank you for watching. Do not forget to like, subscribe, and share for more weekly insights from G2. We'll see you next week. Thank you.